Guys, they want to make you believe the economy is growing. Bunch of hot air. We're going to tell you why. Let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Hey, Bob. So, the Fed GDP now, which is like their predictor of what the next GDP print's going to be, is like stupidly high, right? It's like 5%. I don't get it. I don't think you agree with it. And this data we're going to go over today, I just don't see how it's possible.
Yeah, I mean, look, we're going to show you today that, most people aren't going to be able to have a car, but don't worry about it. You're not going to have a job either. The first thing I want to throw up at you guys is that what I sent over to you on for the weekend, Phil, is I think we're at record repossession rates or delinquency rates in autos, which means we're going to have record repos in the auto sector. And this is more than just people losing their cars. All these investors in these financing arms are all going to take massive baths, because these are all the 2020 cars that people bought with their PPP money or whatever else they got, and now they can't afford them. And these cars are going to be all losers. People are going to be taking 50-60% hits on these ABS, financing investments that they put up. But this is coming at absolutely the wrong time. Tell me this wouldn't scare the dickens out of you. You lose your car, and then now you can't get to work. And worse yet, you don't have a job. And this next chart is the one that really people should pay attention to. This is called permanent job losses. Okay, and every time it spikes, we go into a recession, what the government would call a recession, and we're spiking up again, and from really, really low levels. So it is kind of a misnomer. We've already had a lot of permanent job losses from a lower level here, right. And it's a big problem, because we're at a change in technology too. Where you have if you look at the fast food industry, I don't think many of those jobs are coming back. The automation there is spectacular, and anything administratively done now is either going to be offshored, outsourced, and or automated away. And look at the chat GPT stuff. I think we're just at the beginning of their understanding on how to basically simplify the back office, and that's where a lot of people make a lot of money in the middle class in the United States, and I think those are going away. What's your thoughts on this?
Yeah, I think that you don't have a bull market when you have things like auto delinquencies basically at highs. I mean, if you look at the 2000 or the early 2000s, the dot-com bust, the great financial crisis, we're over those levels. And you're telling me that we're not going into an economic slowdown and a recession? I don't think so. Permanent job losses is a great determination too, because you know how they can fudge the unemployment numbers, and you always say don't believe them, right? That's the first thing you say, and I agree. But you can't fudge permanent job losses. And if you guys had read the fine print in the last unemployment report, that's really the key. There was that the unemployment full-time unemployment actually was going up quite a bit. So again, that's not another indication of an economy that's expanding and an economy that's strong. It's the stuff that you see going into recession. So I think they're trying to paint a picture of everything's rosy, and then you're going to hear about it in 3 to 6 months about how, yeah, shoot, darn it, we're in a recession. But don't worry, we're going to make sure it doesn't get out of control. That's what I think is going to happen, and I think that's what's in play at the moment.
Yeah, and I think, Phil, the issue though too is that number is always suspect, because if you have an inflation rate or a money supply growing at 5%, you have a GDP growing at 5%, you're not growing at all. And I think that's what really gets me so angry, where people don't challenge the wording that comes out saying, hey, we grew 5%. Well, you grew the money supply 5%. So you didn't really grow at all. nobody gained their standard of living. One thing that you have to understand, real GDP growth, meaning standard of living in the country, is going higher. Okay. And if it's not real, if it's the net of the inflation rate, or the net of the money supply, then you're just breaking even. And it's just a number out there, which is actually negative for people, Phil, because when they're pushing everybody up into higher brackets where you pay higher taxes. My house, it goes up in value every year, okay? But I'm not gaining any other value of it, but I'm paying higher county taxes, property taxes from it. There are people out here in California that are begging their employers not to give them more hours because it pushes them out of the entitlement zones. And these things are all by design by the government. They're trying to push wages up so they can pay less out in entitlements, and then put people in higher tax brackets and pay less of the employment, tax credit you get for, working families, the working poor. They're pushing all these people up above and beyond it, where you're just simply not poor.
Right.
And I think this is something that's going to start, people are going to start realizing, saying, wait a minute, why do they say we're growing at 5%, but I feel worse off than I ever did?
Right.
And that's the worst thing that can happen to a politician, is when the expectation doesn't meet reality.
Yep. And I think there's going to be a lot of that coming to a head shortly. And I also think that so many things are ticking the boxes, right, for recession. So so what do you got to do? Well, you got to have to position yourself. And again, that comes down to being ready for this market not to be going back up, but making higher lows. This last move up, everybody got all bulled up, and we faded away at about 44.20 or so on the ES, and that was it. And then we had a pretty sharp drop off. And I think too, that's going to come down to the issuance, which is another thing that affects GDP, is the debt issuance, right? If the Fed's doling out a lot of debt, that actually ends up making its way into the GDP number. Okay, that's just the way it works with economics. So it's a misleading metric, I think, for people. Puts everybody in a bad spot, because they instead of trying to be defensive or watch their spending, they think, job's going to be okay, this and that. And meanwhile, you have this big problem brewing, and all of a sudden one day you're out of a job, you're going to lay off the pink slips, right? If you were maybe expecting that or something, you could be doing something right now to gear up, whether that's shoring up your savings or maybe just selling stuff and, trying to build up cash position or whatever it is. But I don't think they do us any favors, Bob, by blindsiding us with a recession, because they're over here telling us about how great the economy is and Bidenomics this and stuff like that. It's just, you know what I mean? It's just a big charade.
It's a joke. And, you think about it, is that, I'm in the market for, a new truck, and I'm just sitting fat, dumb, and happy, just waiting, because the inventories are just exploding,
right?
In this space, and
right.
And I can certainly wait. Maybe I won't get a new truck. Maybe I'll get a 2-year-old truck or a 3-year-old truck, because those are the ones that are going to get repoed and get it for a really good deal. So I think that's what people need to start thinking. This job losses that are going to happen this time are not going to manifest into new jobs for 2 years. So you better figure a way out to be able to survive for 2 years with no income. I'm not being flippant here, or doomy. I'm just saying is that this is a different animal. This is we're having a sea change. What's going on, and or you better be prepared to move to where they're in second and third tier cities where these manufacturing jobs coming from China are going to be located. All right, and you're going to get used to doing manual labor again, because those are the jobs that are coming back. So I think, Phil, we saw today again. Last Monday we had that squeeze that failed. Today we had a squeeze that didn't even wait for the end of the day to fail.
Right.
And so Janet Yellen, the more she borrows money, the more she's sucking oxygen out of the economy. And it's concentrated now. I mean, look where all the money's being spent. It's just being concentrated. It's not really being spent where it could be most productive. It's being spent on, war products. Right. And I don't know. We beat this with a dead horse. I just think that what's coming is not happy. And it's already here. So we don't know. We don't have to justify ourselves anymore. We are sliding down the slide right now. It's just depending on how steep it gets.
Guys, let us know what you think. Car payments, job losses. What are you guys seeing? Let us know your thoughts, what your situation is. Love to hear about it. Otherwise, guys, thanks for watching. Please hit like and subscribe, and we'll see you on the next video, guys. Take care. Bye-bye.
Trade